Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks tumble, suffering their biggest loss since 2020 as concerns grow about Beijing's stimulus measures. The US Justice Department weighs breaking up Google, alleging it uses its products to promote its search service. Google says splitting off Chrome or Android would, quote, break them. And Boeing talks collapse. The plane-maker withdraws its offer to staff with the shutdown nearing the 1 month mark. S&P says Boeing's debt could be cut to junk. A wall of red souring the mood when it comes to the European stocks story. The downside coming through, and it is pronounced. Heavy losses in the mainland Chinese session, and the ripple across then to European futures. Currently down just 0.1% because the other part of the story is the US performed very well yesterday. Mega cap tech, the Mag 7 driving stock higher and gains higher on the back of that, and towards the end of the session stateside. You saw gains of more than 1% on the Nasdaq 100 and gains of around 1% on the S&P as well. Currently, FTSE 100 futures pointing lower by 0.1%. The S&P currently pointing lower by 0.2, a bit of a breather after the gains of yesterday. Nasdaq 100 futures pointing lower by just 53 points, down 0.3%. 14 straight days of gains, by the way, for Nvidia. Let's flip the board and look cross-asset. The adjustment, of course, around the Treasury space. Still, markets pricing in around 50 basis points of additional cuts from the Federal Reserve. We've been hearing from FOM speakers. We'll unpack that story for you in the next minute or so. The 10-year currently yielding just above 4%, 4.02. Euro dollar at 109. A little bit of softness coming through for the single currency, down 0.1%. Brent, you saw a sharp drop yesterday, currently at 77.75 on Brent, up 0.7%, with the Middle East continuing to be in focus. Gold at 2,618, just down 0.1%. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, we're seeing a bit of a mixed bag in the Asia Pacific, where China has been underperforming for much of today. But if you take a look at the Nikkei, for example, it is tracking those gains on Wall Street, and tech is outperforming against the backdrop of those Fed rate cut bets stabilizing. The story of today, though, is really about China. We saw the Hang Seng losing as much as 3.5% at one point, somehow managing to clock gains again. The CSI 300 pairing those declines of 5-6+% from earlier on in the session. But the bottom line, even though we're seeing a mixed picture in terms of Chinese as well as Hong Kong equities, is that investors want to see more in the way of stimulus. They were not impressed by the NDRC just a day ago, and we are also seeing the holiday spending data out of China not helping things along. It was lagging what we saw pre-COVID era. So wrap all that in. These are the drivers for Chinese markets. And for some of the superlatives, the CSI 300 at one point saw its worst session since February 2020. And of course, don't have to tell you what happened to the Hang Seng just a day ago. Really bad bleed, the worst in 16 years. Let's flip the board, because it's not just China that is in focus today. We also had central bank action, starting with RBNZ. It cut rates 50 basis points. This was as expected. But if you take a look at the reaction in the Kiwi dollar, you might not think that was the case. One of the things that is important to highlight is how the RBNZ's comments suggested it thinks financial conditions are still restrictive. That suggests that there could be more easing to come. And this is not even accounting for the action from London traders yet. We also had a decision from the RBI today. Left rates unchanged in India. This was as expected as well. And consensus is for a move in December towards a cut. What is interesting from the Indian central bank was how it shifted the stance to neutral. So again, this is something that suggests easing to come. Of course, there are things that support this. Inflation has softened. There are risks to growth. But against that backdrop, of course, from the Federal Reserve and that rate cut with 50 basis points really opening the door for these EM central banks. Tom.
Hong in Singapore, thank you. More details on the China story right now, because lines crossing on the Bloomberg terminal. Details coming through from the Ministry of Finance. China's finance ministry to hold a briefing on October the 12th at 10 a.m. They will be briefing on fiscal policy. That will be on Saturday. It's a redhead on the terminal right now. You're seeing a bit of strength for the Chinese yuan on the back of this story and pairing of some of the losses on mainland China. The CSI 300 down currently 3.6%, but far below the heavier losses you saw earlier in the session. Again, China's Ministry of Finance will brief on fiscal policy on Saturday, October the 12th. This is the piece of the puzzle that investors have been waiting for. Will they, for example, expand the deficit limits? Will they issue more debt in terms of some of those sovereign bonds? And will they allow greater fiscal space and fiscal spending, particularly around the consumer and around households? So we continue to watch that right now. China's 10-year government bond futures, by the way, erasing those gains. Again, the yuan strengthening on the back of this, and you are pairing losses on the CSI 300. Still down 3.7%, but well off the lows of the session. We'll keep across this story for you, of course, and the details throughout today. Now, Jamie Dimon says the Fed was right to cut its benchmark interest rate by 50 basis points last month. They were right to do that. That is the view from JP Morgan's CEO. But in our exclusive interview, the JP Morgan head warned that inflationary forces still remain.
Inflation has definitely been coming down. They don't want to go into recession. Unemployment has been going up. They raised rates. They were late raising rates, but they raised it very high, rapidly to 5%, which I think is the right thing. And they're right to take their foot off the gas in that one. I don't think it matters that much, 50, 25, honestly, but I think that was okay.
OK, let's bring in Bloomberg's Valerie Teitel for reaction to what Dimon had to say. What do you make of this, and to what extent this plays into the debate that continues around the Fed's next steps, Valerie?
Look, it was very interesting. He went through this exact checklist of his inflationary worries when it comes to the U.S. economy. He mentioned the remilitarization of the globe. He mentioned fiscal deficits, the green economy and the energy transition, and demographics, all playing into inflationary forces that are weighing on his mind. He went on to warn very specifically on these fiscal deficits, especially when it comes to the U.S., saying that peacetime 7% deficit is just way too high and that the U.S. needs to fix things before they go hockey stick. He also echoed some of the things that hedge fund titan Ray Dalio said yesterday on this warning about the fiscal deficit. And he says that the combination of these inflation risks risks a higher for longer world when it comes to interest rates, and says that these interest rates might actually stay here. They could tick down a bit as opposed to going straight down.
OK, so that's an inflation view coming through from Jamie Dimon, of course, CEO of JP Morgan. What about when it comes to the Fed? We've had a number of Fed speakers. What have they been saying? Do we have more clarity, Valerie?
They're all talking about this balance of risk between inflation and unemployment. Many are using this buzzword of balance. We heard from Jefferson yesterday saying these risks has been roughly brought into balance. We also heard from Adriana Kugler yesterday talking about this balanced approach. And thirdly, we heard from Boston Fed President Susan Collins. Take a listen.
Looking ahead, preserving the current favorable economic conditions will require adjusting monetary policy so as not to unnecessarily restrain demand. And that will require a careful data-based approach as we balance the risks. And there are risks on both sides.
This buzzword of balance, Tom, is very much catching the market's eye because we do not want them to start talking about the risk to inflation being in the upside. That would definitely dent the equity market. But let's take a look at how S&P futures have behaved in the last few sessions. We are very close to those all-time highs, just a 0.25% away, Tom, so we could hit it in today's session. But we really want to keep hearing Fed members talking about this balanced approach, which makes you think that they could look through a possible string of hot economic data. We do not want the market to start thinking about a pause or a skip on the cards. If they keep easing through hot economic data, that is the bull case for the equity market.
OK, Bloomberg's Valerie Tartel breaking down what we've been hearing from FOMC members and, of course, JP Morgan's CEO. Valerie, thank you. Now, to a corporate story, and a major one at that. The US weighing up an historic breakup of Google. A breakup of Google as a remedy in its monopoly case. The DOJ may force Google to sell off parts of its operations, seeking to prevent it using products, including Chrome and Android, to its advantage. Let's get more with our tech reporter, Agnevall, who is standing by for us. Agnevall, this would be, if it comes to pass, an historic antitrust breakup.
Certainly, but I think that big question is really if it comes to pass. I mean, we haven't really seen Washington pushing to break up a major US tech giant for illegal monopolization going all the way back to Microsoft 2 decades ago, and that effort was not successful. But still, this is very significant, this development here. If you recall, over the summer, we had the US judge ruling that Google had illegally monopolized the search market. Now we're moving to that remedy phase, and so we're getting the proposals that the DOJ is putting forth. Those came through in a 32-page filing yesterday and included some quite extreme measures, you could say. So as you said there, yes, that proposal that perhaps they could be forced to break up the business, that would be one of those. There's other things, though, that are in play, including forcing Google to provide access to underlying data that it uses to build its search results and its AI products. That's one other solution. They're also looking at possibly requiring Google to allow more websites to opt out of its AI features. So lots of different things being proposed in those 32 pages. But, of course, it's that question of really whether this comes to pass, any measures at all, given that Google is prepared to fight back quite strongly.
OK, Bloomberg's Agnevall. Thank you very much indeed on that major story around Google and its potential future. Later this hour, by the way, we're going to be speaking with Manish Madhvani, the co-founder of tech investment firm GB Bullhound. We'll get his view on big tech and whether it's distorting the markets, but also his take on where to invest in Europe's burgeoning AI ecosystem. So stay tuned for that interview. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. Amongst the stories being covered there is that potential breakup of Google and the China stocks rat that we're seeing, although that has moderated to some extent on the news around the finance ministry briefing on Saturday. Switching focus. After the break, Israel's defence chief postponing his trip to Washington. More on that and what it means for Israel's potential and very likely retaliation against Iran. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Pentagon says a US visit by Israel's defense chief, Yoav Gallant, has been postponed. Bloomberg understands last-minute objections from Israeli Prime Minister Benjamin Netanyahu were behind the move. For more, our Horizons Middle East and Africa anchor Jemana Besechi joins me now. Jemana, why then was this trip postponed? To what extent is it linked or not to the debate, the discussion going on in Israel about how to respond to Iran?
Yeah, well, Yoav Gallant's trip to the U.S. was billed as an opportunity for the U.S. and Israel to come together to potentially craft a common strategy on how Israel was going to retaliate to those Iranian ballistic missile attack on Israel a week ago. But according to an Israeli official that Bloomberg spoke to, it seems as though the Prime Minister himself had reservations about Gallant undertaking this trip, because what they wanted to do beforehand was to have a already established stance on what they were going to do before presenting it to the U.S. And so, as we understand, per Bloomberg reporting, is Netanyahu was pushing to have a security cabinet meeting first to discuss what the appropriate response should be. And then later, he himself wanted the opportunity to speak directly with U.S. President Biden. Axios reporting a couple of hours ago that indeed that call is scheduled to take place later today. So the two presidents are slated to speak. Now, U.S. President Joe Biden has been reiterating that they would not like to see Israel go after nuclear facilities or oil infrastructure because of concerns about this growing into an all-out conflict in the Middle East, and indeed about the potential consequences that could have on global oil markets, keeping a close eye on what's happening with oil prices over the last week. But equally, Israel has shown an unwillingness in the last couple of months to actually heed U.S. advice when you think about it in the context of the ceasefire discussions surrounding Lebanon, even ongoing ceasefire discussions around Gaza as well. So it's unclear at this point exactly how much leverage the U.S. can exercise on Israel's decision-making. This, as the situation in the region continues to get worse. Overnight, there were airstrikes on Damascus. This time, a residential building was struck by Israeli forces. They are saying that they were going after another Hezbollah commander. But this morning, the Syrian Health Ministry has said that 7 people have been killed in that attack. Ongoing airstrikes in Lebanon as well. And let me just leave you with a quote that we heard from the United Nations Secretary General Antonio Guterres, who says the Middle East is a powder keg with many parties holding the match.
OK, Jemana Pasechi with that important update out of the region, joining us from Dubai. Thank you very much for the latest on the region. Now, Bloomberg understands that Ukraine's allies are detecting that President Volodymyr Zelensky may be getting ready to adopt a more flexible approach as they look to ways at helping end Russia's war and invasion of Ukraine. US President Joe Biden will host a meeting with Zelensky and other Western allies in Germany over the weekend. It comes as South Korea's defense chief says North Korea is likely to deploy troops to battlefields in Ukraine. Meanwhile, in the US, Kamala Harris is seizing on claims that Donald Trump sent Russian President Vladimir Putin COVID tests during the height of the pandemic. The allegations against Trump have been published in a new book from journalist Bob Woodward. Trump's campaign is pushing back on the allegations and accusing the journalist of bias. Coming up, talks between Boeing and its largest union to end that strike. Well, they've broken down for a third time. We're going to have the details on that impasse and what it means for Boeing. That's coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Boeing has withdrawn its pay offer to unions, saying talks don't make sense at this moment. Meanwhile, S&P said the plane maker's debt may be cut to junk on those strike concerns. Let's get the details then from our aviation reporter, Danny Lee, who has been across this story for us from the outset. Danny, what brought these latest talks to a halt then for the third time?
Yeah, it depends on who you talk to, whether you believe Boeing or the union, but clearly in this 2 days of mediated talks, nothing really was new offered on the table here. You know, Boeing stuck to its original offer it made a couple of weeks ago, its most recent offer of 30% pay raise, and also some tweaks on annual bonuses and on retirement. But that is not enough for the unions, who presented its own non-negotiable offer, and that for Boeing is too tough to stomach, basically, because it needs something that is competitive and is not going to jeopardize its business in the long run. So therefore, both sides at an impasse, and it's clearly bringing this strike into a month now, and for every day basically that Boeing has this strike, it's potentially losing up to $100 million in revenue daily.
Up to $100 million in revenue daily for a company that hasn't made a profit since, what, 2019, Danny? What is the impact then? Do we have more clarity on what the impact is going to be and is having on this business, and particularly its debt pile?
Yeah, I mean, first of all, the fact that it still needs to make money, and we did see some figures it produced for September. It has been able to deliver planes to customers, although albeit at a reduced rate, particularly as a strike started in the middle of last month. But clearly, as the strike goes on, this impact will worsen as there is nothing coming through the production lines. And so the risk is that with its cash pile becoming, or evaporating rather, that does put a risk on its credit rating, and the fact that S&P and also Moody's has now warned that its credit rating may be at risk, particularly that the investment grade credit rating. And so for Boeing, what it has been saying is that it's going to have to focus more in the near term on cash preservation, how much more it has to preserve cash in terms of trying to make sure it extends itself, given the entrenched positions on both sides between the union and for it trying to protect itself.
OK, cash preservation in focus for Boeing as they continue to wrangle with their workers. Danny, before we let you go, what is the broader impact right now in terms of the deliveries of these planes to the broader airline space? To what extent is this causing issues for airlines globally, or are they able to replace these Boeing aircraft with, for example, aircraft from Airbus? Or is there a crunch happening right now for these global airlines?
Well, we've spoken to multiple customers over the recent weeks, and they've all been told and expected to see future delivery delays through at least the next couple of months. But clearly, as that extends into next year, we start to see the risk in terms of pressure on airline strategy and how they expand into next year. And clearly, there isn't many options, between Boeing and Airbus alike, and there has been that stress on the supply chain. So for Boeing, clearly, they may come under even more pressure, not so much from shareholders, but from customers to resolve this strike. But we don't see any kind of hint on whether Boeing will really move forward with offering bigger pay raises in order to resolve this strike. And that's going to be critical if they are going to arrest this cash burn.
OK, Danny Lee, excellent in terms of the context coming through for Boeing and the wider aviation sector. Our aviation reporter with the details. Danny, thank you. Let's get back to the China story right now, because the headlines, of course, have crossed in the last 10 minutes or so. The finance ministry, this is the piece of the puzzle investors have been waiting there for then on China. We've had the monetary policy, we've had the central bank action. What comes through in terms of the fiscal support for this economy? We may get more details now, because the Ministry of Finance will be giving a briefing on Saturday in Beijing, and there will be a lot of scrutiny, of course, of that briefing and to what extent they come through with additional fiscal measures. There's already a market reaction to this. The heavy losses that we saw at the start of the session in mainland China, the CSI 300, for example, they have pared those losses. You're still down 3.6% on the CSI 300, but the commodities read across is there, as you can see. It's pronounced. Brent up 0.7%. Iron ore rallying on expectation that if you get more fiscal support, that is going to create greater demand for iron ore. Up 2.4% in the session. So look at the miners, basic resources at the open. 8 a.m. UK time. Copper also getting a lift, up 0.9%. Let's flip the board and have a look at futures as well. This is tying in, of course, to the futures story. You were pretty much you were negative territory in terms of European futures. Those potential losses have paired to some extent. European futures now flat. FTSE 100 futures pointing now to gains of 0.2%, and you can expect the miners and basic resources to give a lift to UK equities at the start of the open. S&P futures currently down 0.2%. NASDAQ 100 futures after decent gains yesterday, around 1.5% for the NASDAQ 100, lifted by Mag 7. Currently looking at maybe a bit of profit taking, down 0.3%. Here's what else to be thinking about then for the rest of the day. 10:30 a.m. UK time. We're going to get a debt sale out of Germany. Germany 15-year bond sale. We see what the appetite is as these sovereigns continue to issue pretty significant amounts of debt into the market, and to what extent the market is able to absorb that, and of course the broader macro concerns about the health of Germany's economy on expectations that there will be essentially zero growth this year for the Eurozone's largest economy. 5 p.m. UK time, meanwhile, the focus switches to France and commentary on the ECB from the Bank of France governor. At least that will be the expectation. Villeroy de Galhau, who's said, and the door should be open to another cut from the ECB this month. We'll see if he builds on that view. 5 p.m. UK time. And at 7 p.m. UK time, it is the minutes coming through from the FOMC for that crucial meeting, of course, of the Fed back in September when they cut by a jumbo 50 basis points. We know there was dissension from Michelle Bowman, but to what extent was Jay Powell consequential, using his soft power to persuade others on the committee to go for 50? Were there doubts about that? We'll get a little bit more clarity on that question with those FOMC minutes as traders price in another 50 basis points of cuts by the end of the year. Coming up, Florida residents running out of time as Hurricane Milton barrels towards Tampa. We bring you the latest. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Chinese stocks tumble on concerns about Beijing's stimulus measures. The country's finance ministry will outline fiscal plans on Saturday. The US Justice Department weighs breaking up Google, alleging it uses its products to promote its search service. Google says splitting off Chrome or Android would, quote, break them. And Hurricane Milton heads towards Florida as a Category 5 storm, potentially causing widespread damage. President Biden says it could be the state's worst in over a century. We check in on the markets with China once again front and centre, with the details coming through in terms of a briefing on Saturday that will be keenly watched, of course, by investors. It is that next piece of the puzzle. You've had the monetary policy, you've had the central bank action from the PBOC, now it's the Ministry of Finance. Will they detail more expansive measures to support the consumer, the battered consumer of China? That will be the focus on Saturday. You've had a bit of a move in terms of your asset classes on the back of that story, particularly in the commodities space. MSCI Asia Pacific then, the broad benchmark across the region, currently up 0.4%. Yes, the benchmark CSI 300 on mainland China is down 3.5%, but that compares to a drop of around 6% earlier in the session. So you paired your losses on mainland Chinese stocks. The HSI in Hong Kong up 0.6%, and the China Enterprises Index up 0.7. Let's flip the board and look at futures then, because this is playing into the situation, particularly as you gear up for the Open here in the UK, with basic resources and miners in focus on the back of the increase we're seeing in prices for both copper and iron ore. European stock futures flat. FTSE 100 futures looking for a positive start, though, on the back of that story out of China, up 0.2%. S&P futures down 0.2 after the gains of more than 1% yesterday. Nasdaq 100 futures looking to trim the gains of yesterday, down 0.3%. But again, after a solid run in terms of tech stocks, Nvidia up about 14% over around 5 straight days. Let's have a quick look cross-asset. We continue, of course, to pass the commentary coming through from FOMC officials on the next path, next move for the Federal Reserve. 402 on the benchmark, 10-year euro-dollar out 109, Brent $77 currently a barrel, and gold currently flat at 2,622. Breaking news right now, TSMC coming through with some sales numbers for the month of September. Of course, the scrutiny on a key component within the Gen AI space, the producer of many of these accelerator chips around, of course, AI GPUs for the likes of NVIDIA. Sales coming in for the month of September at 251 billion Taiwanese dollars. Sales up, this is the important part, sales up year on year close to 40%, up 39.6%. Sales up in the month of September for TSMC, of course, that key foundry and maker of chips from everyone from Apple's iPhones to NVIDIA, up close to 40% year on year. We also have some breaking news around Rio Tinto, the miner. We've been talking about the miners on the back of the China story. Rio Tinto to buy Arcadium for $5.85 per share. That is a cash offer for Rio, valuing Arcadium's share capital at about $6.7 billion. The transaction is expected to close in mid-2025. We'll get you more details on that story. That is a stock to watch at the Open, Rio Tinto. Let's get back, though, to the storm that is building over Florida. Hurricane Milton regaining Category 5 strength, with residents fleeing the coastline ahead of its expected overnight landfall. Catastrophe bond investors are girding themselves for substantial losses as the combined force of Helene and Milton looks set to trigger payment clauses on a scale not seen in years. Let's bring in our weather reporter, Mary Hui, for the latest. Mary, what are forecasters saying then about Milton's expected strength when it comes on shore?
So what we're hearing from forecasters at the National Hurricane Center in the U.S. is that the top speeds of Hurricane Milton's winds will actually slow down a little bit as it approaches Florida. And indeed, it already has from Monday of top speeds of 180 miles per hour to now about 160, and then it will slow even more as it approaches the west coast of Florida in the next less than 24 hours or so, to about 130 miles per hour, which would put it just at the cusp of about Category 3 or Category 4 of a hurricane. But of course, top wind speeds aren't the only thing we want to be looking at with regards to the intensity of the storm. We should look at the size of the storm as well. And the forecasters are saying that the wind field of Hurricane Milton, which is the extent of the winds and they extend out from the center of the storm, will actually grow considerably as it approaches landfall, and that can actually significantly increase the size of the area that will be impacted by the damaging winds.
Mary, at this point, what do we know about where exactly Milton will make landfall?
So the forecast is that it will make landfall right around late Wednesday night local time. Exactly where it will make landfall is very hard to tell even at this point with about less than 24 hours out, just because so much can change. With its trajectory, the storm can wobble, it can stall or loop or turn. And so even at this point, forecasters are saying that their forecasts can be off by even up to 70 miles. So the bigger question here is, whether it will make a head-on hit onto Tampa Bay or go slightly north, slightly south. But wherever it hits exactly, we do know with somewhat more certainty that there will be large areas of storm surges all along large parts of the Florida coast, and that will bring a lot of damages to that area.
Okay. Our weather reporter Mary Hui with an important update as we continue to watch the trajectory of that storm and the potential impact then on Florida. Mary, thank you. Now, progress in renewable power generation has ramped up in recent years. However, some of the sectors of the economy are much harder to decarbonise than others. And of course, as you think about the storm building over Florida, it's a reminder of the climate crisis. At least it will be for many. Joining me now for an exclusive conversation is Håkan Agnevall, the CEO of Wärtsilä, which provides decarbonisation solutions to the marine and energy sectors. Håkan, thank you very much for joining us in the studio. We are about 6 weeks away from the United Nations Climate Conference, COP, which will be taking place, of course. How much progress has been made in decarbonising parts of this ecosystem that you focus on, particularly power systems?
I think a lot of things is being done, but we are still at a very early stage. I mean, we all remember the goal of tripling, for instance, renewables on the energy sector to 2030. On the positive side, if you look at the increase, year-on-year increase, the installation of renewables actually worldwide went up with 50% year-on-year, but still only 500 gigawatts, and we need to reach the 11 terawatts. So it's accelerating, but we are far behind.
500 gigawatts to 11 terawatts. That is a huge gap. Is it your honest belief that we get to net zero by 2050? Do you think that is realistic at this point?
I think we need to accelerate. And a lot of good efforts are being put in, but it's a challenge. If we keep on the current pace, we won't make it.
If we keep on the current pace, we will not make it. What is the global demand picture right now for some of those greener energy solutions? And how does it break down between Europe, US, China? What are you seeing?
I see different parts of the world are moving with different speeds. I mean, if I look at the US, we see a lot of renewables coming into the system. There is significant growth. If you look at Texas, for instance, 40% of the installed power these days are renewables. I think in the US, the US is starting to see some of the challenges that we will see with renewables. You need balancing power because renewables are great, but wind doesn't always blow, sun doesn't always shine, and then you need balancing power to make the system stable. So this whole concept, and this is where we're coming in as Wärtsilä, we are providing some of the balancing power technology. So we really see the need in the US. In Europe, it is going ahead, but I think the renewables growth is hampered by two things. One is permitting, getting permits to install offshore wind. And the other thing that is hampering, I would say, we need to create the right market mechanism. How do you get paid for this balancing power? And there are a lot of work going on in Europe on that. If we turn to China, yes, China still has a lot of fossil power, but they are, in absolute terms, the biggest investor in renewables right now. But in China, long way to go. So it's happening in all over the world, but it's a different pace and different.
Do you worry about a President Trump in the US in terms of that renewable shift?
I think when we talk about the potential new administration or existing one, I think we should take a step back. If you look at the US situation, the last 20 years, a lot of renewables has come into the system. And 20% of energy generation now in the US is based on renewables, and we do see it accelerating. The primary driver, it's very affordable energy. So we see it happening, and we need to take a step back.
Which technology has, you're focused on new technologies as well, which technology has the most potential in your view right now?
I think one of the key messages is that green is not black or white. There is no single simple solution. We will need, quite frankly, all the tools in the toolbox to be able to be close to where we want to go. So it's about different fuels, it's about carbon neutral fuels, it's about zero carbon fuels, it's about carbon capture, hydrogen, ammonia. We need all of the things that we can leverage to make this journey. The good message is the key technologies that we need to make the transition, they are here. Now, the challenges is, of course, capital, infrastructure investment, providing the fuels, and, of course, the whole political process around it.
In Europe, we've got Northvolt in Sweden, a maker of electric vehicle batteries, a different type of battery to the one you look at, sure. But they have filed for bankruptcy in the last couple of days. Is that a canary in the coal mine around Europe's efforts?
I think you need to look at the different green initiatives or companies building new technology. Each has their separate story. So I don't, from that perspective, I don't think Northvolt is a canary. I think on the battery cell production, I mean, we all know the global capacity, there is overcapacity. So on battery cells, the prices are coming down. It's a very competitive market. But please note, there are several technologies that we will use to decarbonize the future. So therefore, there is a lot of exciting things happening in other spaces in parallel with battery storage.
OK, what are you guys doing in terms of M&A? How acquisitive do you want to be? What are you looking to add to your stable of products and services?
So our company, Wärtsilä, we are a technology leader. It's all about innovation and technology and services. And we focus very much on organic growth. Because
are you ruling out acquisitions?
No. But we do more bolt-on acquisitions. We bring in some digital competences, some niche competences. We really focus on organic growth because we are in our 190-year history, we are probably in the best position ever because of our technology offering.
OK, Håkan, thank you very much indeed. I could extend this conversation for a couple of hours, but we've run out of time. We really appreciate you coming into the studio. Really fascinating on the update in terms of how some of this transition is unfolding and the challenges as well going forward. Håkan Agnevall, of course, the Wärtsilä president and CEO. And, of course, Håkan Agnevall is one of the key guests in London for the Bloomberg NEF Summit. It's a flagship event where energy, finance and technology discussions converge. You can scan the QR code that you can see on your screens right now to be able to get a virtual attendee ticket, I believe, to that event. You can get more details by scanning the QR code. Now, some other stories making the news this Wednesday. The French government has survived a no-confidence motion brought by leftist lawmakers. The motion received just under 200 votes, far short of the 289 needed to topple Conservative Prime Minister Michel Barnier. The Socialists say President Macron should have appointed a premier from the ranks of the left-wing coalition, since the alliance won the most seats in July's snap election. Kering has named Stefano Santino as the new Gucci CEO to lead a turnaround at the French luxury group's biggest label. The deputy CEO and former LVMH executive will take over in January. Gucci, which accounts for 2/3 of Kering's profits, has struggled with cooling demand for high-end goods in China. Kering shares have fallen by more than 40% this year. Coming up, Manish Madhvani, co-founder of tech investment firm GP Bullhound, will be getting his views on where to invest in Europe's AI ecosystem. That is coming up. This is Bloomberg. Welcome back. Happy Wednesday. You're watching Bloomberg Daybreak. Checking the breaking news lines right now, coming through from the French Central Bank Governor, of course, Villeroy, who is a member of the ECB Governing Council, saying that an ECB rate cut is very probable. At the next meeting, you would assume that's what he means. It won't be the last. An ECB rate cut is very probable. It won't be the last. We know that speaking a few days ago, he did suggest that there is still space for the ECB to go again this month. Markets are pricing at about a 95% chance of another cut. It would be the third one from this European Central Bank, and a move lower of about 23 basis points. That is the expectation coming through from markets, expecting about 47 basis points of additional cuts from the ECB by the end of the year. Euro dollar currently at 109. Now, the US is weighing an historic breakup of Google as a remedy in its monopoly case. The DOJ may force Google to sell off parts of its operations, seeking to prevent it using products including Chrome and Android to its advantage. Google says splitting these units would, quote, break them, and the company is preparing to respond in court next year. Meanwhile, the GP Bullhound All-Stars Awards kick off in London. It's an annual event. They kick off tomorrow. An event billed as Europe's largest tech awards. Let's bring in Manish Madhvani, co-founder and managing partner of GP Bullhound. And Manish, we'll start with a question on Google. More broadly, how big tech is shaping this ecosystem. Is the gravitational pull of big tech doing a disservice to some of the innovation that's coming out there, or is this a supportive ecosystem right now? Talk to us about the role of big tech and the concerns amongst regulators, certainly, that there's a monopolistic effect at play.
Yeah, I think it's obviously very topical, and the dominance of these companies is growing really fast. There is a balance, though. You've got to strike a really delicate balance, because a little bit of dominance can benefit the customer, whether that's small businesses, large businesses, or the consumer. And we want that. And I think there's some classic examples of things like Amazon now. Amazon has changed the lives of many people, but it is a dominant player. But the ability to order pretty much anything you need online has changed the lives and improved the lives of many people. There is a tipping point, though, where you start abusing the position to charge people different prices or to manipulate the way that you can push your products. And I think this has to be regulated. Whether the regulation can ever keep up, because I think one of the regulators came up with a very good statement saying we've got the Wayne Gretzky proposal philosophy, i.e. he always used to skate where the puck was going. And I think tech is moving so fast, especially with AI and the ability to now look at many different industries. Data is the new oil. Yeah. This is moving really fast. So I think it's very hard for the regulators to stay ahead of that. The rate of change is going to increase even more. The best way to kind of make sure the ecosystem stays fair is competition. And I think the way that we're seeing AI open up the search market, Google was so dominant for a long time. Now you're seeing all these predictions that next year they may drop below 50% for the first time in their history. And this is being driven by TikTok, by some of the AI players like Perplexity and others. So I think that's the ensuring that ecosystem is still thriving and competitive is probably the key. OK,
that's really interesting in terms of how regulators should be thinking about this. So this week is the All-Stars event. It's an annual event. We've profiled a couple of the founders here. What is exciting you? What does it tell us? What do the contenders this year tell us about how this ecosystem has changed?
I think it's fascinating to see at the moment, because we're actually doing this against a bit of a backdrop of bad news in the private markets. Crunchbase and a few of the analysts came out with a report that venture funding was at kind of all-time lows since 2017, quarter on quarter. And I think it's about 180 billion year to date. So against that's kind of... My view is we're in this kind of bipolar state. The venture market has frozen a little bit, but I'm probably the most optimistic I have been for 18 months about the market. And what's driving that is really seeing these companies that are emerging. So a few stats that jump through for me is Stripe came out with this very impressive report on how quickly are AI companies scaling at the moment. And the stat was, to reach 1 million, it usually takes 11 months for an AI company to reach that, versus 15 months of the cohort before that, to traditional software companies. But the staggering fact, I mean, some of these facts sometimes jump out and you think, Christ, this is changing the landscape forever, is that AI-centered companies are reaching 30 million in revenues in 20 months. That's 5 times faster than the previous cohort. So this rate of innovation is scaling really fast. I guess we see that in the companies that you've been talking to. They're kind of vertical AI companies. They're taking some of the benefits of the horizontal players like ChatGPT, which gives them huge amounts of data and the ability to reason to a certain extent. And then they're building really deep vertical knowledge in the legal sector, Luminance, and Deep Key on the property sector, Connects One on the call center and customer engagement platform. And when you marry these two things coming together, you see these companies build proprietary data, and then the rate of growth is spectacular. So across that cohort of the companies they're presenting, many of them are growing from tens of millions into the hundreds in less than 2 years.
OK, so that revenue's there, because that's interesting. We have about a minute left on the clock, Manish. But on the question about return on investment, does that suggest you're not as concerned? The deep spend on CapEx, the ROI question, you're seeing evidence that that's coming through?
We are. With these private companies, not everybody, of course, it's always going to be the good businesses that can perform. But I think the CapEx play is obviously intense, talking about 100 million to train these models. But when you see entrepreneurs getting together and the opportunities, the rate of growth of these underlying companies, as shown by this report, it's spectacular at the moment. I haven't seen it at this level ever in my career, and that's spanning quite a few years now. OK, Manish, thank you very much indeed. Always appreciate you coming in to the studio, giving us the context ahead, of course, of the All-Stars event. Kicks off tomorrow here in London. Manish Madhvani, managing partner and co-founder of GB Bullhound. Thank you. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. China front and centre once again for these markets, with the announcement that the Ministry of Finance will be holding a briefing this Saturday. Put that in your calendars, because we are expecting more details in terms of the fiscal support. How extensive it is, of course, and to what extent it's going to be implemented across China remains a key question. But you've seen a reversal in terms of the downside that's come through for Chinese stocks. You're still down 3.8%. Let's not get that wrong on the CSI 300, the benchmark in mainland China. But when I came in this morning, it was down about 5%. So you reverse some of those losses. The yuan is a little bit stronger as well, and you've seen some movements across Chinese bonds, a bit of selling coming through. The MSCI Asia Pacific then, as a consequence of some of this, up 0.4%. That's the regional benchmark, because you're seeing some gains in Hong Kong. The HSI, for example, up 0.2%. Let's flip the board and have a look at the terminal that draws you back and gives you that experience when it comes to comparing the S&P with the CSI 300. Yes, we've been focused on this massive surge higher for Chinese stocks, but come back a year and here's how things have played out. The S&P is still up about 30% over that period of time. The CSI 300 up about 10%. The fundamentals, you could make the case, are there for US equities, whereas maybe they are not yet there for China. We'll see if that develops. Bloomberg units can get these terminals charts on the screen. This is Bloomberg.